right, let's talk about real estate. Let's talk about the money market. Let's talk about inflation and the latest predictions from the Wall Street Journal with our good buddy from KeyCity Capital, none other than Stephen Patterson. Stephen, welcome back to America First.
Good to see you, Dr. Gorka.
All right, so you're the expert. I've just listened to your counsel and to your colleagues. The inflation numbers are in. What do they mean? The CPI for January, the CPI for February, expectations from the Fed. Are things getting better, Stephen?
Yeah, no, the Consumer Price Index, or the CPI, measures what your goods have cost, the increase of that cost year over year, right? And so in January, it was up 3.9% year over year. We want to see that number start going backwards. Unfortunately, in February, it came in at 3.8. So yeah, it went backwards, but not by a lot. The Fed really wants inflation to be around 2%. We want inflation to be around 2%. That's where you get wage growth. That's where you get, if you own a business, your goods, you can sell your goods for a little more each year, right? That's a healthy number. But this number is really high, and it's been really high now for about 2 years. And it really kind of coincides with, something that you talk about often, which is just out of control federal spending. And that's
what
really
you mean. $1.2 trillion is too much? You mean that?
Yeah. Adding $1 trillion to the deficit every 90 days is an unhealthy practice. I mean, who knew, right? And so this is affecting your listeners. This is affecting me. This is affecting every American household when you go to the store, when you go to the mall, when you go to buy a car. And the way that it affects you is, number one, yes, your goods cost more. 3.8% year over year, right? But the second thing it does is when you go to the bank and you say, you know what, we're ready to buy a home, we're ready to buy a car, we're ready to make a large purchase that requires borrowing. Well, now, instead of that interest rate, if you remember not so long ago, 3%, now national mortgage average, right? 30-year mortgage, 7%. 7%, right? And so now you cannot buy as much. You cannot use your money the way you would want to because it doesn't go as far. And so as the Fed continues to raise these interest rates, right, to tamp down inflation, what they're really doing is they're slowing spending. They're limiting purchasing power. And that's where real estate investments can make a lot of sense in a listener's portfolio.
All right, so talk to us about why it makes sense, what the options are, why it's not something that requires a lot of input from the listener who wants to have, real estate that brings, income to them. Explain the options from KeyCity Capital.
Absolutely. I talked to lots of listeners, and, they may have owned it in the past, owned rental real estate in the past, or always wanted to, something of that nature. And so where KeyCity comes in is we purchase these assets, large apartment complexes across the southeastern United States, focusing on red states. We're not going to put up with squatters. We're not going to put up with eviction moratoriums and any of that. We focus in red states in the southeastern portion of the United States, and we pool capital together. We purchase these assets and we cash flow it back to our investor. And the reason this makes a ton of sense right now is because as home ownership gets more and more expensive, there is a portion of our country that is being locked into rental real estate. And, the Wall Street Journal recently had a story called The Forever Renter, right? And so where we can go in and provide quality housing that produces a return to the client that is tax advantaged, tax efficient, and can make sense for a portion of the portfolio is where we come in. And, with 8% preferred returns back to the client, I tell you, there's a reason that our business is growing and people are jumping off of that stock market roller coaster that is unfortunately going to have some challenges given the federal government spending.
Yeah, 8% tax advantaged, an investment in something real, a complete and utter no no-brainer. Find out more. Talk to Stephen and his colleagues, 817-912-1569. That's KeyCity Capital, keycitycapital.com/Gorka, keycitycapital.com/GORKA, or call Stephen and his colleagues, 817-912-1569.